Ladies and gentlemen, good day and welcome to the Nitin Spinners Limited Q1 FY26 earnings conference call, hosted by Smiths Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Avnish Chandra from Smiths Limited. Thank you, and over to you, sir.
Thank you very much, Manav, and thank you very much everyone for joining this call. On behalf of Smiths Limited, I welcome you all to first quarter FY26 earnings conference call of Nitin Spinners Limited. We are pleased to host the top management of the company. Today we have with us Mr. Dinesh Nolka, promoter and chairman and managing director of the company, and Mr. P. Maheshwari, CFO of the company. We will start the call with initial commentary on results, and then we will open the floor for question and answers. Now I will hand over the call to Mr. P. Maheshwari, CFO of the company. Over to you, Maheshwari, sir.
Thank you, Avnishji. Good evening and a warm welcome to all the participants to this Q1 FY26 earnings call of Nitin Spinners Limited. I hope you have had a chance to go through the financial results and investor presentation available on the company's website and stock exchanges. I will start with a brief overview on operational and financial performance for the quarter. Post that, our CMD, Sri Dinesh Nolka ji, will give you an overview of industry and business scenario, as well as company's vision and overall strategy for future. Coming to the financial and operational performance, total revenue for Q1 FY26 stood at rupees 793 crores, a marginal decline of 1% on year-on-year basis. Export contributed nearly 62%, whereas domestic market contributed 38% for the quarter. EBITDA for the quarter stood at rupees 111 crores, a 6% decline on YOY basis. EBITDA margin for the quarter is 14.02%. That's a decline of 77 bps as compared to last year, same period. Profit after tax for the quarter stood at rupees 41 crores. That's a 3% decline as compared to last year, same period. EPS and cash EPS for the quarter is rupees 7.29 per share and rupees 13.85 per share respectively. On the operational front, our spinning capacity is currently operating at over 96% utilization, while weaving and finishing division are operating at more than 90%. However, revenue declined YOY and QOQ due to lower yarn prices in line with the lower cotton prices and lower export demand as the overseas buyer were cautious on account of uncertainty of tariffs. That's all from my side. I now request Sri Dinesh ji to share his insights about industry and business scenario.
Good evening, everyone. Textile industry is currently going through a transient phase. Global procurement and overall shipments have been slower than expected, mainly due to ongoing tariff uncertainties and geopolitical challenges. Despite this, the Indian textile industry continues to show some steady performance. Recently, US government has announced 25% tariff on imports from India. At the government level, talks are on, and we hope the same would settle down at lower levels, which will provide level playing field with other competing countries. However, we at Nitin Spinners would not face any major impact due to US tariffs, as we have very limited direct exposure in this market. Trade agreements with major countries are also expected to improve India's competitiveness, although the full impact will unfold gradually over the next few years. Nitin Spinners already have presence in UK and EU, exporting both finished fabrics and yarn, and will try to build upon for increasing export to these geographies. On the demand side, we believe inventory levels across brands and retailers are at historic lows. Over the past few months, the buyers were very hesitant to place large orders and instead relying on just-in-time procurements, we see this as a positive sign for integrated manufacturers like us, as once the business cycle revives, we shall be in a good position to reap the benefit. We at Nitin Spinners have consistently crossed the 800 crore revenue mark for almost last 5 consecutive quarters. And this quarter, we came just short of that milestone, which was mainly caused by uncertainty prevailing in global markets, as we just explained, and in reduction in yarn prices due to lower prices of cotton. At Nitin Spinners, our well-diversified product portfolio, customer base across different geographies, focus on value-added products, optimum utilization of capacities, and cost efficiencies allow us to withstand the challenges and capitalize on the opportunities. As announced earlier, we are steadily progressing on the capital investment plans as per schedule. To maintain our growth momentum, we are also increasing renewable power footprint by increasing capacity within our premises, and also through strategic investment in hybrid power SPVs. These initiatives of capital expansion as well as solar power are aimed at strengthening our market positions, expanding our product portfolios, and introducing high-value specialized products to meet rising demand for quality fashion fabric from domestic and international brands, and also lowering our cost of productions. These initiatives should improve overall margins and return ratios for the company going forward. While some short-term volatility may persist, we remain optimistic for the medium to long-term growth. With this, I would like to open the floor for question and answers. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Manish Otswal from Nirmal Bang. Please go ahead.
Yes, sir. Thank you, Nitinji, for taking my question. I have a couple of questions on the business. So first, we have a export business of 64% of sales in F25, and your comment on demand is low in export market. Given the tariff-related uncertainty and weak consumer demand in export markets, so how do you see the revenue shape up in the rest of the current financial year, whether we'll be able to similar revenue of last year, or we will see some decline? What is your assessment currently?
At this point of time, we expect to reach the last year revenue for sure. Our production capacities are running at full stream, and we are having production more than what we were producing last year by about 3 to 4%. That should take care of our average revenue decline. And as far as export sales is concerned, I think that should be compensated with the domestic sales. And further, just for your information, as with the US tariffs being lowered for various competing countries to India, where we are also exporting, our exports primarily should not get affected.
Okay. Secondly, sir, recently the government has signed FTA with UK, so it should incrementally positive for export demand for Indian textiles. How does Nitin benefit from it, and when we can see the meaningful benefit for the industry?
First of all, since we are already at the moment exporting some yarns, as well as we are also exporting some fabrics to various brands for UK market, we should have a positive impact on this. We would try to capitalize this opportunity. We would try to increase our share of exports into this market. Just for your information, this FTA will fructify fully by 1st January of 2027. At the moment, there will be a graded reduction in the duties, which should start to kick in from next calendar year. And I think we should have, India as a country should have a meaningful advantage in this due to this FTA, especially in textiles.
Okay. And lastly, on check on the current realization trend compared to the last quarter, what is the movement in the realization and the raw material pricing outlook currently? What you guys have?
Raw material prices at this point of time in India is higher than the international market because of a couple of reasons. Number one, we have a lesser crop this year, so that's why we had and there was minimum support price being taken care by the government. So at the moment also it is prevailing more or less near that minimum support price only. But this minimum support price in India is higher than the international market. So we expect the Indian cotton to remain at similar levels going forward as well. There should be no major decline here. Internationally also, the cotton has quite bottomed out and there is not much scope left there. So I feel, and for the yarns also, these levels are one of the lowest levels, which we, in dollar terms, which we have seen in last 7-8 years. In fact, last one decade, I would say. So more or less, we feel that the downside in the prices is very, very limited. And of course, there are no triggers also for the upside. So they should remain like this in steady state for next at least 1 or 2 quarters. And then we should see how the demand kicks in and how the things shape up.
And very quick clarification, there is no plan of slowdown our capex program given the demand uncertainty, right, sir?
Sir, at the moment, like there is no, I would not say there is a demand uncertainty. There is only the geographies are going to change. It is a transient phase where today various brands will be relocating their all the let's say plans where they should source from what they should source. And in that process, of course, we are yarn manufacturers which are intermediate suppliers. So we are definitely going to be present. If they are going to buy more from Vietnam or Bangladesh, we should be able to export to those countries also. So this is only a transient phase. Ultimately, demand will remain. And as I highlighted, that demand that the retailers are having very low inventory, they should ultimately kick in good demand going forward.
All right, sir. Thank you very much for answering all my questions and all the very best for the coming quarters.
Thank you.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. Anyone who wishes to ask a question, you may press star and 1 now. We have our next question from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Thanks for the opportunity. Sir, on the cotton prices front, our prices in the domestic market because of the higher MSP are much higher compared to what is the prevailing rate in the global markets. So, how is that expected to, impact the margins of the company and the sector?
So this is already, this particular scenario is already prevailing since last 1.5 years. And in that scenario, we have maintained our margins at this level. So I do not expect that it should further dent our margins as such from here.
So you expect that we'll be able to maintain around 14-15% margin going forward in FY26 as well?
We have been able to maintain these margins for last 6-7 quarters, and I hope we should continue to do that.
Sure. Okay. Thank you. Wish you all the best.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. Anyone who wishes to ask a question, you may press star and 1 now. We have our next question from the line of Lakshmi Narayan from Kesma Wealth Private Limited. Please go ahead.
Thank you for the opportunity. Sir, I just wanted to understand in our export mix, the top 5 countries which we are exporting. Would you be able to provide that information?
Basically, the top 5 countries in that will be, I think, Bangladesh, that is one. Vietnam is another country. Then we have Egypt, then European Union, In the European Union, we have different 4-5 countries where we are exporting. So these should be the top 4-5.
Okay. So is it possible to give granular the percentage mix, sir? Is it possible?
No, sir. We would not like to, for competitive reasons, we will not be able to declare on that part.
Okay, sir. Sir, my next question is, you're saying because of cotton prices are low, it was affecting our yarn prices also. I was not able to catch what is the trigger here. Could you explain it a bit more deeper, sir?
Generally, when the raw material cotton prices goes down, we see that the yarn prices also falls. And when it goes up, the yarn prices, of course, with a lag or maybe sometimes with in the similar period. So that is what it means. And the raw cotton prices have gone down here in India as well as in international market. The finished goods prices have also fallen. So if you see we have seen that about raw material prices have fallen by about around 1.5-1.6%, and yarn prices have fallen by about 1.7 or 1.8%. So similar in the similar range, it is like this.
Okay. So it is not like if raw material prices fall, the yarn will go. It's not that way. Correct.
No, it can, of course. Sometimes it has happened that way also. But in this particular quarter, both have fallen together because normally yarn prices do not fall in a straight line. But because of the uncertainties prevailing, this has happened particularly in this quarter.
Yeah, but this is not the trend. It happens we cannot predict how it is going to be or somewhat kind. Is it right, sir?
No, it is not that. It is not a linear kind of thing. It changes as per the market demand and supply.
Okay. Understood, sir. The last question is, could you just tell me what was the yarn spread, sir, this quarter?
So basically, yarn spread was about 95 rupees a kg. Maishuri, am I right? It is in this range? Exact number?
100 rupees. 100 rupees.
100 rupees. It was 100 rupees.
Okay. Thank you, sir. That's it from my side, sir.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1 now. Anyone willing to ask any questions, you may press star and 1. We have our next question from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, thank you for the opportunity. Sir, I look at your investor presentation and sir, we are doubling our fabric capacity and increasing our spindle capacity. Sir, so what would be the incremental revenue from the same?
It will be about 1,000 crores.
And on the margin front, sir, do we expect some margin improvement from that?
Basically, we are having out of this 1,000 crores, about 60% will be from the fabric business directly, and fabric business normally has better margins than the yarn business. At the moment, the product mix is 20 to 23% of fabric and rest is yarns. In the expansion, it will be about 60% on fabrics and 40% on yarn. So technically, we should have a better margin scenario.
Sir, could you give me what is the margin differential that we are currently making on our fabric versus yarn segment?
Actually, we do not make a separate kind of balance sheet. So I'll not be able to exactly give the numbers, and giving just approximate numbers would not be right on my part here.
Okay, got it. Sir, and just one of our competitors recently mentioned that they are getting a lot of government subsidies for these capex. So are we getting some kind of PLI benefits or subsidies for these capex?
We are not under PLI. Spinning business and this fabric business is not under PLI. Only technical textiles and some special kind of fabrics is under PLI. However, we are getting the state subsidies. So in case of ours, we have two subsidies which is there. One is on the interest subvention, which is about 3% of our outstanding loans. So we get a interest subsidy from the state government. And then we have a capital subsidy on the capital expansion, which is linked with the employment and the investments. So this capital, our interest subsidy, as I explained, it is about 3% of our term loans. And capital subsidy is about 21.6 crores for next 10 years.
Got it, sir. So that was from my end. Sir, just a final question, sir. What is the IRR or payback that you expect for this 11-20 crore CapEx?
It is in the range of about 14 to 15%. That is what we are targeting.
Got it. Sir, that was from my sir. Thank you so much and all the best.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and one. Anyone who wishes to ask a question, you may press star and one now. The next question is from the line of Reena, an individual investor. Please go ahead.
Hi, thank you for giving me the opportunity. Could you help us understand, the tariff situation, like what is the impact on orders? Any talks on, the burden sharing, anything that, you'd like to clarify? Or you mentioned government talks are on and the percentage is expected to be lower. So just want to understand, your thought process on how, you'd tackle that, or just how much, any update on that front that you can give on the public platform?
Yeah. First of all, as I explained in my opening remarks also, that we are not directly impacted because our exposure to the US is very limited. So that is one part. So directly, we have not shared or any on the tariff part or any reduction or rebate on that part to our customers in US. So that has not happened. So that is one part. Secondly, as far as tariffs are concerned, I think the industry associations are continuously meeting the government officials, including the Commerce and Industry Minister, and evaluating the situation, how to tackle this particular tariff situation. Earlier, as per the earlier negotiations which were happening, we were expecting much lower tariff, in fact, lower than most of the countries. So the situation has just reversed, and now we are evaluating exactly what would be the damage and how that could be mitigated. Still, government officials are very hopeful that they have some deal discussions on the trade deal already happening in the middle of August in US. So they are expecting that they should settle, but that should take another month or so, maybe. So that's why they do not want to give leverage to the counterparty of backing down on that particular part. So whatever negotiations are going to happen is going to happen going forward. So for some period of time, India will be hit by these tariffs. Our exporters will be definitely affected by these tariffs. So in India, from India, we have a lot of exports of branded apparels as well as home textiles. So those particular segments could have an impact also because of this.
Understood. Thank you. Can you quantify your exposure here? Like you mentioned, it's limited. And considering, the discussions are still on, for how long do you see this impact or impact on demand or uncertainty going to last? Like a couple of quarters, longer than that? Just trying to understand, for how many quarters do we expect this to continue?
Actually, in industry, we feel that whatever will happen within this calendar year. So this should settle down by the end of this year. Deal or no deal or whatever impact will be there. And major impact at this point of time is on the running orders. The new orders, whatever will come with tariff. The customers also know what tariff they are going to pay and how that is going to be mitigated. And so that is going to be then accordingly norm of the business, which will start from the next calendar year. So whatever is going to happen is, I think this is going to continue for next 3-4 months. The impact should last for that much time.
Understood. Okay. Thank you. Just one more question. On slide 8 of the investor presentation, you mentioned capacity expansion for FY27. Can you give the bifurcation of how much would we expect in 26? And it says 20% and 88% increase. So how do we see that in 26? What is the bifurcation between 26 and 27?
In 26, we are not going to have any major capacities coming up on stream. It will be all work in progress. Some modernization, which is going to be there, of around 50 crores will be spent during this particular calendar year. Rest, the major capacity expansion will come in the next financial year only.
Understood. So the incremental revenue we would see only in 27.
Yes.
Okay. And the power saving initiative, can you quantify on the margin front what would be the improvement? Just a ballpark figure.
Actually, this power capacity, what we are adding up, is also going to happen over a period of time in the next few quarters. So it should start to kick in some capacities from in the second half, let's say from the third quarter. And then in totally, we have done agreements and the new capacity of about 20 megawatts. 18 megawatts is outside SPV and about 5 megawatts our in-house capacity we are creating. So this is the capacity which we are already creating here. So we should start to see the benefits going forward. In general, typically we see that our power cost reduction for these kind of initiatives is about 30%. That's what we are expecting to happen going forward. But it is not on the whole capacity, it is on this 20 megawatt capacity.
Okay, understood. Thank you.
Thank you. We have our next question from the line of Vikram Suryavanshi from Phillip Capital India. Please go ahead.
Historically, we used to have this as a India decent export to China, Bangladesh in terms of cotton yarn. So is that currently restrictions are there to this market or how that is impacting?
As such, there are no restrictions over there.
Okay. So, but India or Bangladesh yarn trade is happening or as it is like deliberately cut down by the
No, it is happening. It is happening as usual. There is no change in Bangladesh exports. The only cut down is that the road exports is not allowed from both the sides. So that doesn't impact the volumes as such. It is happening as usual.
Okay, understood. And for us, utilization rates are relatively much better, but given the yarn spread, how is the industry utilization for the India broadly?
Broadly, industry utilization is going down only in India at the moment. As I do not have very authentic figures with me, but as we understand from various sources, that about 15% of the capacity is down at the moment, and we are having only utilization in the range of 80 to 85%.
Mm-hmm. And we have seen significant buying by CCI this year, which has given a lot of comfort in terms of cotton pricing. But does once I think the relatively supply from CCI comes down, is there a chances that cotton prices in domestic market can go up and probably impact spinning companies in India, or how do you read that situation?
I think as far as I am informed, CCI still has about one third of their whatever they have sourced out from the country, let's say, which is about more than 10% of the total production of the country. And we are left with only about 2 months of the season, less than 2 months of the season. And from October onwards, we expect the new crop to come in. So we are not expecting some spike in prices or something like this, as well as a lot of imported cotton is also coming in from the southern hemisphere, the crop of which has already come in. So price hikes on the front of cotton is not at all expected at the moment. Major price hikes, I would say.
Understood. And last question about since our exports are increasing, does it impact working capital, or how is the working capital in export compared to the domestic?
Working capital, I think we are adequately funded and does not have major impact on the working capital side, I think, because of this.
And in terms of cotton stocks, how many months we have covered?
Normally, we do not declare the cotton stocks, and we have a flexible policy on cotton stocks, but we are reasonably covered for this season at least.
Got it. Thank you very much, sir, and all the best.
Thank you.
Thank you. We have our next question from the line of Rahul Jain from Credence Wealth. Please go ahead.
Sir, first question on the industry side. In the previous participant, did you mention that home textile would be one of the most affected sector with regards to this tariff thing going on? Is that your understanding?
Yeah, home textile as well as the apparel companies which are exporting directly to the US brands in the US retail sector.
And this is based on your reading about the tariffs or your understanding from your customers who could probably be who are from the home textile segment?
Actually, this is from the data which comes out regularly. How much is our exports to US from the home textile companies, and also what is so we have a total exposure of about $9 billion on the export side to US. Of this $9 billion, majority is comprised of these two articles only, that is apparels and the home textiles. So that they are going to have, and there the 25% tariff is going to kick in. So that is going to impact.
Okay. And so now the questions on our company. With regards to yarn prices also, in your initial commentary, you mentioned we are somewhere at the lowest end in last 7-10 years. Is that right?
Yes.
So, and the spreads are around 100 rupees currently on the yarn and the cotton. So how have the spreads moved in last 1 or 2 years typically? Because previous to that, you had cotton which had gone up to almost more than 100,000. But in post-cotton correcting, say last 4 to 6 quarters, how have the spreads moved up or how have the spreads trend been in last 4-6 quarters?
The spreads are more or less in the similar kind of range, first of all, in last 4-5 quarters. Now, coming to our basic first part of the question, that how the spreads have moved in last some of the years. I think we would be very happy with this spread which we are having if in year 2000. Since then, there is a lot of cost increases on part of wages, on part of transportation costs, on part of the power costs. So that has impacted our net margin level. Further, the capital costs have also increased. So all in all put together, on an absolute basis, these margins look reasonable if you compare with last 5, 6, 7 years. On dollar terms, they look quite low. And also on the capital, on the side of how much capital we invest to get this kind of margins also is relatively lesser. So we feel that these margins should be in the range of about 120 to 125 rupees to get a reasonable returns on our investments as well as on the facilities.
So do you expect the spreads of about 100, 105, which have been averaging for last 4-6 quarters to move up?
We are averaging, our average has been 95 to 100 rupees has been our average differential here.
Okay. And so with regards to the sales or volumes, so currently we are operating at optimum capacity.
Yes, of course.
Or is there some growth, or is there some scope for volume growth this year, FY26?
Not much. We are doing some debottlenecking, some modernization, so that will kick in, but that is not something major to talk about or have a major impact on the production facilities, production capacities at least. So our spinning, weaving, processing, all are operating at nearly top capacities at the moment.
Sure. So currently, given the current situation as we speak today, we will probably be almost at similar kind of revenue with similar margin, unless either the yarn prices move up or the spreads change. As we speak today, we should be at around 14-15% margins on EBITDA and probably similar kind of top line. Is that understanding right?
That is your summary. I cannot comment on what is going to. We try to do our best, and a lot of it depends. A lot of uncertainties there. New crop is going to come in. How that is going to behave? If the prices there falls and benefits the Indian spinners, That is again going to have advantage. Currencies also become volatile recently. So that is, if that goes, that depreciates again, it can have a different dynamics altogether. So all this, we need to look at it as it comes.
So I do understand the kind of volatile environment we are living in, and we really don't know how things will become normal, and also the time it might take. Now, coming to the CapEx part, sir, we are doing roughly about 1,100 crores CapEx. Currently, and you mentioned that in the incremental 1,000 crores of top line, 40% will be fabric and 60% will be the yarn. So
No. Reverse, sir. 60% will be fabric and 40% will be yarn.
Okay. So on an overall basis, at a top line of roughly 4,003 at today's prices again of everything, so it is somewhere like 3,300 crores is the top line of the last 4 quarters, last year. So if we add about 1,000, so that is about 4,300. So the overall fabric portion, which is roughly about 23-24% currently on the existing top line, that should move in the range of about 35-40%.
That should be more than 1/3 at least.
1/3. And what is the differential margin between fabric and yarn for us?
It is in the range of about, if you see on the absolute basis, it is about 8 to 10%.
Absolute basis. Okay. So, no, I didn't get it. So when you say absolute basis would mean what? The X percentage is yarn, so fabric will be how much?
X plus, because there is investment, so X plus 7, 8, 10%. Depend on kind of fabric, kind of product you make. It depends on that.
Sure. And with this capex coming in, that should start kicking in some kind of sales in FY27?
Yeah, of course.
And typically, what kind of, or what is the time schedule of the capex being done? Should we be run through?
We are expecting the complete capex to start in the second half of the next financial year.
Second half.
We should be able to complete.
So probably 1 quarter of capex benefits could come in FY27. Maybe more, but at least 1 quarter should be there.
Yes, at least.
Okay. That is quite helpful. Thank you so much.
Thank you. We have our next question from the line of Dheeraj Thakur from Elara Capital. Please go ahead.
Hello.
Yes.
Dheeraj, we can hear you.
Yeah, good evening, sir. As most of my questions have been already answered, I have 2 questions left. The first one is, what are the key levers or strategies that company is focusing on to improve the gross margin going forward?
So first, there are, as I highlighted, that we are focusing on value-added products, especially on the fabric side and also on the yarn side. So that is one strategy where we can, with the higher value addition, we can have better margins. On the cost side, we are trying to reduce our energy costs. Also, we are opting for, since modernization and upgradation is going to happen, we are also trying to reduce our labor costs as well. So we are working on all the cost fronts which are there and trying to improve some bits over there so that we can improve the margin.
Understood. And currently, how much percentage of our total revenue comes from the value-added product, which would increase our margins in future?
At the moment, in the value-added product, as you can see that 22% is our fabrics itself, which is value accretive in comparison to the yarns which we are producing. And we are making some specialized yarns, which could be in the range of 15 to 20%. So overall, about nearly 35 to 40% of our total sales is in higher value margin. So we are trying to improve upon that.
Okay, so going forward, we are targeting around 50 to 60% revenue to become from the value-added products, right?
As I explained in our earlier explanation also, that we aspire that 1/3 of our revenues should be from the fabrics, and the value-added portion also, if it remains same, we should reach 50% level.
Understood. And how does the profitability compare between domestic and export markets currently?
Currently, at this point of time, more or less balanced. Last year, for most of the year, it was. It also depends a lot on currency part, as well as the imported cottons are also, when you have to import cotton, then that is again another part which helps you in maintaining the margins. So more or less, at this point of time, I would say they are evenly balanced.
Okay, so if we remove the forex part, then it would be on even terms, right?
Yes, exactly.
And could you share your view on the domestic demand environment, particularly for the woven and knitted fabrics?
Demand scenario for the domestic market is pretty reasonable. And with the upcoming festive season coming up, we expect this to pick up also going forward. Once maybe post this rainy season, I think we will have a better demand pick up in the country itself. And we are seeing a steady growth. We are seeing a lot of brands also coming up in India, new brands as well as existing brands also doing reasonably well. So demand scenario as far as domestic market is concerned is quite robust.
Understood. Thank you so much, sir, for answering the questions.
Thank you.
A reminder to all participants, if you wish to ask any questions, you may press star and 1. We have our next question from the line of Vikas Rajpal from Growth Rally Ventures. Please go ahead.
Hi, sir. Thanks for taking my question. So my question is more on the tariff part. So from 7th, since the contracts will get renegotiated because of the higher tariffs, how do you see the industry-wide volume shaping up? Because, one thing would be increase in realization because of higher tariffs, and second would be there will be some effect on the volumes because the offtake would be lesser. So that, and plus, if the textile companies have to take any, hit on the margin. So how do you think the, demand environment will be shaping up post the tariffs coming?
At this point of time, frankly, I would not be able to answer your question because this is a development which has happened just 3-4 days back. The government, what kind of reaction government is going to do in this context. Plus, also with the customers, how we are going to discuss and negotiate with them. This is something which is still, we are just contemplating on that. So I would not like to speculate anything on that particular part. This has happened just 3-4 days back, so we need to still see and evaluate how the industry works out this challenge.
Okay. And secondly, sir, as you mentioned that majority of the capex would be towards fabric. So how do you think that the margin profile of the company would be going ahead in FY27 and 28? Because right now we are at around 14-15% margin. So would we move to higher teens, or will the margin profile go above 20%?
Normally it should, and with more value addition, the margin should improve. Definitely, that is what the objective of this capacity expansion is. So definitely, it should be better than what it is today. And then there are a lot of other factors which are also playing out. The geopolitical factors, also these kind of fiscal factors, tariffs, and other things which are happening all around the world. So all these will impact us definitely. So we will need to still see how it pans out going forward. But the effort is towards improvement in the margins.
Okay. So lastly, your view on global cotton production and expectation price movements if you have.
Global cotton crop is reasonably good, and it is projected that it will be slightly higher than what it was last year. We are expecting prices to remain at these levels or slightly. I think even cotton prices internationally has also reached a level where below this it is not sustainable for most of the countries. So we are in the lower side of that bracket. But because of the sluggish demand environment all around the world because an uncertainty prevailing. Most of the retailers and the pipeline is getting destocked. We feel that prices should remain at these levels at least for next 6 to 8 months till these kind of uncertainties get cleared out.
Okay. Thank you so much for taking my question, sir. Thank you. All the best.
Thank you. Thank you.
Thank you. We have our next question from the line of Uday Kumar from UK Capital. Please go ahead.
Hi, sir. Am I audible?
Yes, very well.
Sir, in our presentation, we see the knitted fabric production is down 15% almost YOY. Are there any specific challenges impacting this segment currently, and what is the recovery trajectory going forward in knitted fabric segment?
Knitted fabric segment for us used to get exported into US. With the tariff kicking in, we had to slow it down. We are trying to, spread this within in the domestic market as well as in the other geographies. So we have to restructure this particular segment in a manner that we are able to utilize it better.
So we are redirecting it into other geographies, or what is the plan?
We are already redirecting it to other geographies, also increasing in the domestic market. But it takes a bit of time to re-establish these products. So maybe in going forward in coming quarters, we will be able to improve upon this.
And sir, even though you don't have direct exposure to the US, any indirect pricing pressure from the countries like Bangladesh, because you said Bangladesh has a major export percentage of your kitty. So anything from this Bangladesh? Because Bangladesh
already the prices have come down substantially from what it was in about a year back. From there, it has already come down. Margins have also come down. So not much scope is left on the prices front unless the raw cotton prices goes down further.
So from here, we can say that prices will be bottoming up, sir.
Looks like that.
Okay. So after kicking in the renewable energy thing and the labor cost reduction, so mid-teens is achievable from FY27, we can say that?
Yes, of course.
Okay. Thank you, sir. Thank you, and have a great day.
Thank you.
Thank you. We have a follow-up question from the line of Reena, an individual investor. Please go ahead.
Hi, thank you for giving me the opportunity again. I just want to understand a couple of more things. Are we seeing any, is there any scope for inorganic growth for the company? Are we seeing any corporate actions on the horizon? Also, just so that I understand better, is it right to say that, considering uncertainties on the global front, do we see, or is it right to assume 26 and maybe first half of 27 would be, slow on the financial performance bit or on the business side of things?
First of all, let me take the second part of your question. We feel that it should remain steady. We should be able to maintain the pace what we have been maintaining for last few quarters going forward as well. Yes, we'll not see any major growth there since our capacities are fully utilized and the raw cotton prices are at lower end, and then there are uncertainties prevailing in the market, so improvement in margin, substantial margin is not possible. So it should remain in a steady state. This is what the understanding is at the moment for the revenue side. Now coming to your inorganic growth kind of thing, there are opportunities coming in. Always it keeps on coming, but it needs to fit in our psychology as well as our growth plans. So if something proper comes in, we are open to it. But as of now, we do not have anything on the plate.
Okay, understood. Also, you mentioned about exporting geographies might change in an answer of an earlier participant. Do you have specific markets in mind for that? And I just want to understand how would it be different operationally? Maybe on the
As you
cost
can
front, would it be very different?
No, actually, what is happening today is we are seeing that U.S. being a very big textile and apparel market, and they have imposed earlier that duties were uniform for most of the countries except some least developed countries, and that too the differential was only about 3, 4, 5%. Now, with these duties and tariffs coming in, the differential has become enlarged. There are some countries where there is only 10% tariff, and there are some countries which have 20 to 25, 30% tariffs. So the countries with 10% tariff will have an advantage. So we will like to divert, since it is not at all a restriction on us, so we can divert our capacities towards those countries where there is a 10% tariff. So that's how you can reduce the impact of the tariff, and those countries will be exporting more to US. So this is how the whole geographies can change. So this is, and those countries may tend to buy then the finished goods from the countries like India and China. So that way, because they do not have any restriction on their own domestic consumption. So this is how it can pan out going forward, and this is how the geographies will settle. The businesses will settle going forward.
Understood. Thank you so much, and all the best.
Thank you.
Thank you. Due to time constraint, we'll take one last question from the line of Dheeraj Thakur from Elara Capital. Please go ahead.
Thank you so much for giving the opportunity to ask the question again. Sir, I would like to understand what proportion of our exports currently go to Bangladesh, as recently there was this news that Bangladesh may receive partial tariff exemptions on garments made using US raw materials. And could you help us understand how this development might affect our demand?
So, primarily, it does not have any effect on our demand. As I understand, this has come very recently, I think yesterday or a day before, that if they have 20% of the US cotton content in their garments, they may get an exemption. But I think that is going to be available to all the countries, not only to one country, but this may be applicable to all the countries. Here in India, since our cotton is expensive, imported cottons are slightly cheaper. We are already importing from US cotton, and we are supplying this to our various customers all around the world. So, rather this could become an advantage for us. Since we are an importer of the US cotton, we can supply to our customers and they can get the advantage of the tariff advantage. So this may be applicable to India as well. I don't know. This is being said that this is being made applicable to most of the countries. If there is a US content in the product, then you may get an exemption. Raw material in the content, then you can get that exemption. That is what it is at the moment. Now coming to your first question, that what is the percentage? Overall, about 30% of our sale goes to Bangladesh, and so that is an important country for us.
Understood. But sir, as I can understand, we don't export currently to USA. So if we are not exporting to USA, we won't be getting this advantage. But Bangladesh would be getting this advantage if they import cotton from USA. So that way I was thinking, will it impact our demand?
They can, since there is a full traceability available, if we produce a yarn with US cotton and then supply to Bangladesh spinner, he can still take that Bangladesh person, he can still take that advantage. As of now, for your information, India is importing more US cotton than the total Bangladesh does.
Okay, understood. Thank you so much, sir, for clearing out.
Thank you. Ladies and gentlemen, that was the last question for today, and I now hand the conference over to Mr. Avnish Chandra for closing comments. Over to you, sir.
Dinesh sir, before ending, just one question. Despite uncertainty, you looked very confident and you talked about that you are moving ahead with the capex and all. Is there any situation or any further uncertainty you can think of which can delay our capex, or in any case you will move ahead with the plan?
I mean, frankly, at this point of time, I do not mean we have already seen a lot of uncertainties in last 6 months since we announced our capex. And with this, I'm very confident that going forward, a organization which has a integrated one will have an advantage over the rest of the players. So in that direction, we are moving ahead with a complete integration. Maybe more towards the fabric. That was our approach when we started. And all these uncertainties which has been created over a period of time has further, let's say, made us believe in this, that we must go in for better and better value addition. Yes, as on today, spinning business does not look very attractive, but rest of the things looks quite okay. So we are going ahead with the expansion as of now. And if any other challenges which may come in, we will be open to share with you all.
Okay, sir. Okay, sir. Thank you very much, Dinesh sir and Maheshwari sir, for giving us this opportunity to host the call. Anything for closing comments, sir?
Yeah, sure. I'd like to thank everyone for taking out time to join this call. I hope we have been able to address all the queries. I would also like to thank Smith's team and Avnishji for hosting the call. For any further information, if unanswered, kindly get in touch with our finance team and our investor relations advisors. Thank you once again.
Thank you, sir. On behalf of Smiths Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.